All right. Well, the price of gasoline has moved some, but not a lot. It shouldn't really move much at all for us. Oil prices now, the oil prices came down, what, 10%, 12% after the successful hit on Iran's nuclear facilities. Gasoline up just slightly. I'll just take a quick look here. Gas price actually down today, $3.22 a gallon today. Yesterday, $3.22. A week ago, $3.20. Almost $3.21, so it's a penny higher than it was. A month ago, it's 4 cents higher than it was a month ago. And it's 25 cents cheaper than it was, 27 cents cheaper than it was a year ago. John Tamny is the editor of Real Clear Markets. He's here to help me sort it out. No real impact on energy prices. That's the fact, John. I'm looking at the numbers right here in front of me. What do you say? Welcome to the program.
Hey, thanks for having me on. And what I say is it's what's always been true. The Middle East as a driver of the oil price, even including OPEC, is vastly overstated. We're talking about how gasoline is $3.22 a gallon right now. Let's go back in time to the 80s and 90s. You could routinely buy a gallon of gas for under $1. Oil price per barrel was low as $7 in the 1980s, as low as 10 as late as 1998. Was OPEC, was Iran, was the Middle East, were they feeling generous at the time? No. In the 80s and 90s, we had a strong dollar. We've got a much weaker one today. But in the past week, we haven't seen the dollar decline, and so oil prices didn't spike in the way they might.
So here we are, and adjusted for inflation, fuel's cheap, right? I mean, you can talk about the 80s and 90s, but gas $1 a gallon, gas $3 a gallon. Adjusted for inflation, gas doesn't cost much at $3 a gallon. If it's $2.50 a gallon, it's even better. And America runs on vast quantities of cheap energy. True?
If you're going to adjust it for inflation, but I see inflation as a devaluation of the dollar. And so let's look at something like the price of gold. When the 21st century began, a dollar bought 1/260th of an ounce of gold. Today it buys 1/3300th. And so what I would prefer to say is just think how cheap gasoline would be if we had protected the dollar all of the 21st century. We'd be paying exponentially lower prices for gas, which is what we should be. I mean, if you look at the history of the oil price, Google an oil price chart from the 1930s until the 1970s, and you'd see a pretty flat number. Just roughly $2 a barrel for decades and decades. That's what happens when you have a stable currency.
So it's a currency issue, and I don't dispute that. In fact, maybe that's what with the gold has leveled off at, I don't know, about $3,700 an ounce last time I looked. It's been there for a bit. But it goes up in these little surges. It'll go up $300 an ounce. It'll go up $200, and then it stays there. It doesn't seem to retreat, which to me is reflective of a weak dollar. Am I wrong about that? I mean, I'm not an expert like you are, but I see a weakness in the dollar, and I see during the Biden administration and even now, all this money being flooded in, right? Especially over the last 4 years, not so much this year, but good grief. I mean, that just destroys my savings, doesn't it?
Yeah, I mean, you're not wrong about it. Let's never forget the gold price doesn't move. That's why historically currencies were measured in terms of gold. Gold is the constant. When you see the price of gold go up, that's a sign of a weaker dollar. When you see the price of gold go down, it's a sign of a stronger dollar. When Ronald Reagan was running for president in 1980, gold hit an all-time high of 875. He was running on a stronger dollar, and so as his polling chances grew, the price of gold fell throughout 1980 as an expectation of his victory. And so Donald Trump, look, love him or hate him, he believes a weak dollar drives economic growth. It doesn't. And so you've seen the dollar decline substantially under him. Oil would be much cheaper if he pursued a Ronald Reagan, let's throw in Bill Clinton policy favoring a strong dollar.
So how would you get there? What would you change policy-wise to move us in that direction?
To me, it's very simple. FDR, how did he devalue the dollar? He just said the dollar's not worth 1/20th of an ounce of gold anymore. It's worth 1/35th. So if you wanted to reverse it, you'd say, we think the strong dollar, stable dollar is very important. The U.S. Treasury could, between breakfast and lunch, say we're going to target a specific dollar price in terms of gold, and we will that will be our target. Markets would do your adjustment for you at that point. You wouldn't need to do anything. This is not
So,
about money
okay,
supply.
so game that out for me. Game that out for me and the folks listening. I want to know what would happen there, John. All right, so they say we want a target of $1,000 an ounce for gold, right? Making it a strong dollar, increase to the whatever, pick your number. What would that do to inflation? What would that do to Wall Street? What would that do to a mortgage rate? What would that do to everything?
It would be, once again, it would just make inflation no longer an issue. Inflation is a devaluation of the currency. So if you make a stable dollar your policy, you no longer have inflation. See, all this time we keep mistaking higher prices for inflation, lower prices for deflation. In a market economy, the direction of prices is always lower because we get better and better at producing more and more of a market good at lower and lower prices. And so prices move around for all sorts of reasons. But if you make the dollar as good as gold or whatever commodity you want to stabilize it in, you get rid of the quote inflation problem. And so presidents can do that. Presidents get the dollar they want. Never forget President Nixon. The dollar was 1/35th of an ounce of gold. A lot of economists who gave him bad advice said, "Oh, you need to sever that link." That was the inflation. Severing the link was President Nixon's way of saying, "I want a weaker dollar." Markets gave it to him. And so it's no surprise that oil prices, meat prices, soybean, wheat, everything spiked in the 1970s. They weren't more expensive. Just the dollar in which they were measured had become a lot cheaper, had been shrunken. And so you reverse it by having a policy of dollar price stability, something that no president has really talked about since Ronald Reagan. Bill Clinton's Treasury did a good job there ever since then. Presidents Bush, Obama, Biden, not as bad as the others, certainly Trump, they've all pursued a weak dollar.
What do you think about the dollar as the world's reserve currency? Is it in jeopardy?
Not now. It's very apparent that the dollar, if you went to Pyongyang, if you wanted to buy stuff in North Korea, you better have a dollar. If you go to Iran right now, you better have dollars. If you go to Venezuela, you better have dollars. Lebanon, the Democratic Republic of the Congo, wherever you go, the dollar is the world's currency.
So
Speaks.
what about this BRICS summit coming up? I think it's July the 6th. I keep hearing about where these countries are getting together to try to undermine the dollar, try to put the Chinese currency in, the yuan.
Oh, good luck with that. Look, governments can't force producers to use a currency they don't want to use.
Fair.
The dollar is still the current currency of choice in China. For Chinese companies trying to raise money, they're raising dollars. This is true in Russia too. You can't force it because what do you do when you take a dollar in return for your work? You're trying to get something of equal value. You're paid in dollars, and then you want to get goods and services of equal value in dollars. And so producers decide which currencies circulate, and that's why the dollar circulates globally. It's the currency of choice for business people around the world. I'm merely saying it could be much better, precisely because the dollar is the world's currency. Think of what we could do for the U.S., but also the world if the dollar had stability.
And
you
was
wouldn't,
stronger.
as you say, have the value of your work taken from you.
Yeah. Professor, that's what I'm going to call you from now on. Professor John Tamny, editor of Real Clear Markets.
Worse.
No, I think you should. I think people are financially illiterate, and we should educate them whenever possible, John. And I appreciate your work here today. Thank you.
Thanks for having me on.
Really appreciate it. I'll have him back anytime.